How can I reprice my services to drive profits back into the firm or to increase your current profits? And we have a stellar panel joining us today, which is really, really exciting. I am Rebecca Mahalic. If you have not seen me on an Ignition webinar before, I am an accountant. I'm a director at Business Depot and head up the accounting services in the Sydney office. I'm also the head of accounting at Ignition, where I get to do really cool things like run these webinars and talk to our great panelists and learn all about what they're doing in their business and share that and educate the wider accounting community. Now, our agenda today, we are going to go through with this stellar panel who I'll introduce shortly, their proven scripts and frameworks to handle any pricing conversation. This is a great group of people who have had all the kinds of conversations that you're having with your clients, good and bad, when talking about changing prices, adding services, and potentially also losing services when having these conversations. We've got tried and tested tactics to increase fees while keeping your clients on board, at least the clients that you want to keep on board. And we're going to figure out how to identify those profitable clients and know when it's time to part ways and how to do that respectfully so you're not burning bridges or causing any problems for your future self. As I mentioned, we have a stellar panel today. We have Jason Robinson, who is a director at Future Advisory, Michele Grisdale, who's the founder of Rainforest Bookkeeping, Paul Sweeney, the managing director at Pretium Solutions, and Katie Bryan, founder and CEO of Propeller Advisory. Now, the panelists will be joining me one by one so that we can go through more specifically what they're doing in their business around repricing and conversations with clients. So I would love to introduce our first panelist today, who is Jason Robinson.
G'day, Beck. Good to see you.
Hi. You too. I feel like we just did a webinar just the other day.
Yeah, I reckon. It feels like we were just in here. So, yeah, no, good to be back and, just keep it flowing. It's that time of year where, look, everyone's got heaps of things in the background, lodgement deadlines, FBTs, June 12th's come and gone. But, if we're starting to turn our attention into planning for next year, these are all really valuable conversations to start to, get our heads around and do some forward planning.
Absolutely. Thank you so much for joining us today. So Jason is an FCPA. He's the director of Future Advisory, an award-winning firm known for helping individuals and SMEs turn complex tax and business decisions into practical, profitable outcomes. With over 15 years in public practice, he's not only a trusted advisor, but also a business owner himself, co-founding Coff & Co., a coffee brand that keeps him as caffeinated as his clients. Jason is the chair of CPA's Victorian Public Practice Committee, a member of Xero's Partner Advisory Council, and an APAC advocate for Ignition. He's also the co-host of the Numbers Game podcast, which I suggest signing up and listening to, where he shares the mic, talking strategy, growth, and the realities of business ownership. That is such a cool resume. Thank you so much for joining us again, Jason.
Thank you. Goodbye. Whoever wrote that, tip top. Nice job.
You did a good job here. All right, let's dive straight in. The first question I'm going to ask, which has actually come out of a conversation I had with someone in your team, which is why I wanted to ask you this question. Who in your firm is empowered to have pricing conversations, and how do you train them to do that?
Yeah, great question. Look, I think that empowering to have pricing comes down to the team members' understanding of a firm, what bolts it all together, from charge out rates, productivity percentages, all the KPIs. So we're extremely transparent around what our expectations are of each of our team members in different pods, teams, different layers from, senior client advisor, senior accountant, graduate. Everyone kind of knows what's expected of them and what their targets are. And then that also means then when they start to look at pricing a client, it's putting the mix of who's going to work with the client, how many hours, what value. There's all these different things, but most of it comes down to a deep understanding of how the firm is built and how the numbers come together, what our expectations are, and then being transparent and clear with the client around how our pricing is put together. At the end of the day, though, a lot of it comes down to the value the client feels. If the client doesn't hear from you, if they don't feel like you're being proactive, it's very hard to increase your prices every year. But it's, we're in a tough business where there's a lot of things that we need to get to do, and a lot lot of the times we're doing it in the background, but we're just not communicating it clearly. So pricing conversations are across the board. We also have really open office plans too. So often, we'll be on the phone or on a Teams talking to a client about pricing something. That means everybody in the office can hear how the conversation flows. If we hit barriers, how do we talk through the barriers of being challenged on a price potentially where, maybe a client doesn't understand the value. So being able to explain that in a room full of people who are listening in is sometimes daunting, but also, a really big moment of education for every team member to go through that together. And also when you get off that call, a lot of the time you unpack it, you turn to the person next to you and say, hey, did I explain that clearly? Was that okay? So there's ongoing refinement all the time of how we have these conversations and how we do it. So I guess there's role play for some firms, it's role playing internally. For us, it's kind of throwing people in the deep end and learning from that experience, and a bit of role play behind the scenes then when you come out from that. So yeah, hope that helps explain a bit of that.
I absolutely love that open plan allowing for that wider education. We had a relatively open plan at the first firm I worked at, and we have one here at Business Depot as well. It's definitely the way I learn is listening to my peers have conversations, especially as a junior. And I would just use the same phrases all the really cool people in the office used. So Jason, can you share a time when a pricing conversation went badly, and we've all had them, and what did you learn out of that process?
Yeah, look, all of the ones that come to mind are the ones where we've tried to price too cheap to do the client a favour. The client's kind of challenged, hey, I just want to be on the bare minimum. I just want to pay for, the basic compliance. I can't afford that right now. But not being able to afford to have a good advisor or someone in your corner being proactive and doing the extra things, it's just kind of causes problems. So where we've had issues is taking on a client that wasn't our ideal client. We've bent the rules of our own parameters of what makes a good client and what makes future advisory able to look after them. I'm usually the one historically that was bending the rules saying, geez, I just want to help this person. So to bring them on at a price that was less than what our standard package should be. And then what usually happens, you get a little bit into the relationship and they're going, I want this done. Okay, cool. Then you'll price out a scope because it's not in the basic scope that you've done. And then all of a sudden you're going, if I'd known I was going to be charged for that, I don't know if I would have done this. So you're just getting off on the wrong foot when it's about price for a couple of services and not actually then working on, the bigger picture for a client of where do you want to get to? Why are you joining Future Advisory? Why are you coming to a new accountant? What services do you need? But what's the bigger picture? What are you trying to achieve? Do you want to be more profitable? Do you want more time back with your family? Do you want to go on an annual holiday? Do you want to sell the business? These bigger picture questions all of a sudden get away from going, well, hang on, I don't want to just pay the minimum fee for a BAS or a tax return because I want to be working on exiting a business or building growth. So yeah, problems, the worst pricing conversations have been pricing too cheaply or pricing, to help somebody out who didn't think they should or could pay for something, rather than just going all in and sticking to our guns of going, we know who we work with, we know what we do best, and we know the price we need to charge to deliver the value that we bring.
Fantastic. And it's always the directors who let down the team when those things happen. I do it all the time. But that rolls into the next question really, really well, because you have a multi-service offering. You have a whole range of different services you give your clients. You just talked about going all in and bundling. How have you seen success in bundling as a way to increase your pricing generally?
Yep, good question. I mean, across the years, we've started off, was $5,000 as a minimum price, and then how do we get that to 10? And then as we start to move towards 15 being the minimum package fee, it's like, well, what are we doing for that $15,000? And by having, managed reports or managed finance, virtual CFO or a level of virtual CFO, quarterly, monthly meetings with an advisor, into your accounting package, into your bookkeeping services, and being able to package that all up to go, the client who started off as a basic compliance client for $5,000, within a couple of years of learning about all the additional things we do with clients, becomes the 10, then becomes the 15. And all of a sudden you can have less clients but deeper relationships. So that's what's worked really well for us. I mean, not every firm is going to have like an advisory and a bookkeeping, but for those firms out there that do have a range of services that they can offer, it really becomes the would you like fries with that? And not just upselling because it's nice to get someone to eat fries when they go through the Macca's drive-through, but it's upselling for the services that are of high value and need. You can see a client when their file's not reconciled and they're really struggling. But what you can do there is if you don't have bookkeeping in your firm, it's partner with a bookkeeper that you know in your network, so that you can say, hey, let us take that pain away from you. We're going to get somebody else involved. And then at the end of the month, we'll throw together a management report so you can understand your profit and loss and balance sheet. So yeah, bundling and upselling high value services, which again, if you tie it back to the big picture of that client, what are they trying to achieve? Where do they want to go with their life? And then reverse engineer a bundle, a package, a bunch of services that they need. At the end of the day, if you take those pain points away from a client, they are going to love you forever and be a raving fan.
That's fantastic. And the more services you offer, the stickier they are. So I can imagine that then also is driving the longevity of those client relationships.
Yeah, 100%.
Amazing. So when you're having a look at moving your clients from like that 5,000 to 15,000 and beyond, how often do you review the profitability of the clients and reassess the service packages for them?
Not often enough. No, so we're starting to transition and change how we have these conversations. I mean, historically, back to like when you make mistakes, when we did like annual packages, many years ago, I've been doing this for a little while. It's the greys that are coming on, but we used to use the terminology fixed price agreement, which was a nightmare because as soon as you say fixed price agreement, but you're doing it the fees a year in advance, things can change. We're working with some pretty high growth clients that boomed, and all of a sudden we're going, well, shit, hang on. If we did a fixed fee for $3,000 for financials, but now we should be charging $7,000, are we copying that loss? So one big thing was changing the language around what we do to more of a retainer-based service, a minimum standard fee, and then on top of that, starting to explain to clients that if we do charge you more, it's not a bad thing. It means you're getting more value, you're getting more service, or you've grown, your business has changed, which requires more from us. So we then had to change how often we reviewed it and how we review it. At the moment, it's that time of year where, Ignition's, I'm sure on the back end of Ignition, they're going to feel the pain of everyone kind of jumping into roll over their proposals, maybe going from classic editor to new proposal editor. Like there's going to be heaps of action in Ignition's back end at the moment. But now is a great time to do it. It's reviewing where you've gone. And, at a bare minimum, it has to be annually. You should not roll over your prices and just roll forward without having a good look at your own business and your own margins and model. For some of the services that are more I guess they can change more rapidly. Like let's say a fast growth business, if you're trying to do a set retainer for bookkeeping, we're now looking at can we review that every 3 or 6 months if we know the business is changing rapidly. So it doesn't have to be a 12-month engagement anymore. Same for some of the virtual CFO or big managed finance projects. It might just be, hey, cool, we're going to engage for 6 months. It's a big project. You're going to pay this much per month, and at the end we'll review and see, do we need more or can we back it off a little bit and be more efficient? The pricing question around client profitability needs to be reviewed more than annually, but at a bare minimum, that's a good starting point. So at least just do it.
Fantastic. And that makes total sense that if you have high growth clients or clients that you're working with closely, chances are you do need to review that every 3 to 6 months. We've done the exact same thing where we've got ourselves caught 12 months later and we're just running losses because how do you have that conversation then? Because it was fixed price. You mentioned in there as well just around what you're going to be doing with Ignition. Now, Ignition has released some benchmarking data, which you know about because we were both on that webinar together. Is that benchmarking data impacting the way that you're going to price your services this year?
Yeah, definitely. I mean, look, I had the pleasure of being on that webinar, which meant we were unpacking it in real time. I think just being able to just get some proof of concept that we are charging either the right price for certain services, but based on our inputs and our expectations and our margins that we're after. But there's also some that I thought, we've got room to move. I mean, our individual tax returns, for a couple of years on years, we were a bit like, oh, maybe we don't put it up. Oh, but then with audit activity around the ATO, with the extra work papers, with all the other stuff, it's like, no, if we're going to do it and do it well, we need a premium price for that service if we are going to do it. So there's definitely things like individual tax returns getting jacked up, business activity statements, like building in some more value around that. So rather than just sending a BAS, sending out, the outcome, was their quarter good, adding some little additional things that don't take much time. And with AI these days, it's pretty easy to throw together a pretty robust summary. But all of a sudden, if we were $350 a BAS, can we go to $450 a BAS with an extra email or phone call? They're the kind of, because they're always thinking, what extra value do we add with a price change as well? But yeah, that benchmarking report's been brilliant just to be able to see where do we stack up against, all of our great peers and don't call them competitors, just other great accounting firms in our profession, and just go, cool, we want to align with them because the rising tide floats all boats. And the more accounting firms that charge the appropriate fees for the value we bring clients, the better off our profession will be long term.
Fantastic. Thank you so much for your time, Jason. That was really great. Always good insights from future advisors. Hopefully I'll see you on another webinar soon.
Yeah, chat to you soon. Thanks for having me, team.
Bye. Okay, now introducing our next panelist, Michele Grisdale. How are you, Michele? You're on mute.
Did that. Very cold. It's cold here in Sydney. So,
yes, it is.
But I'm great. I'm kind of in limbo, waiting for the end of the year to happen. So yeah.
Yeah, your busy time. Like everyone's always busy, but your busy time kicks off 1 July. It's
1 July to middle of August, and just do not ring my phone. So yeah, absolutely.
So Michele is the founder of Rainforest Bookkeeping. She is a registered BAS agent, certified trainer, a member of Xero's Partner Advisory Council and the BAS Agent Advisory Group to the ATO. Super cool, by the way. With deep expertise in bookkeeping, training, and technology, Michele specializes in helping clients in the trades, professional services, and e-commerce industries streamline workflows and gain financial clarity. An avid heavy metal listener while working, she also enjoys being on the water and loves to fish, finding balance and energy wherever she can. And thank you so much for finding the balance and time to join with us today.
Pleasure. Always great to see you.
Okay, let's dive straight in. So, Michele, in your business, you mostly engage on a hybrid basis. Can you explain what that means and how you discuss that with new clients that may be expecting just an hourly rate because that's their expectation of bookkeeping?
Absolutely. So I consider it a hybrid basis because we do fixed pricing, but we also do hourly minimums. So there's no just flat hourly pricing anymore. It's based on the task and the outcome. So when I'm working with tradies who work on an hourly basis and they're expecting me to work on an hourly basis, we flip that. We start with a meeting. We start with an ignition questionnaire because we need to understand so many points, like their structure, their industry, how they operate, their pain points critically, because every new client is different and depending on the industries that we work in. The other thing that we do is we start with a 90-day getting to know you period. This has saved many, many, many heartaches and kept me from taking on clients that I should never have taken. Because during this time we work on it. During that time, we might work on an hourly basis or a task minimum basis, focusing on the outcomes rather than just the hours spent on the time. This is great because it gives us time to understand their true needs because the client probably doesn't know what they really need, even though they think they do. They just need bookkeeping. Maybe, maybe not. Understand key areas for improvement and streamline the processes that they have so that we can get everything efficient, because the last thing I want to do is waste time doing something the client tells me to do when it's not efficient. And then during this 90 days, it gives the client a chance to see how we work and the value we bring, and then they never ask me about an hourly rate again. So before we lock into a long-term engagement, it's a low risk, high clarity way to build a strong relationship from day one or not.
I love that. I think it's fantastic. Days to get to know somebody. I think it's for anyone you're going to have an ongoing relationship with, I think it's absolutely vital because I can think of some clients that within 90 days I never want to speak to again.
And I think, and that's for every relationship, like move in together, give it 90 days. The first month is bliss. The second month, you notice little things like leaving toilet seats up. The third month, you start bitching. So it's not just in business relationship. It's in every relationship. 90 days, you can't hide anything. So I think it's a good rule.
Fantastic. Now, I'm going to mix up the questions a little bit because rolling straight in from there, if you do go through your 90-day period and you realize that this is not the appropriate client for you, either they're not the right business, they don't work with you the way you can, or you actually aren't bringing what they need to the table, what tips do you have for saying no so that you don't damage that relationship which might be appropriate down the track?
Perfect question. And I'm really glad you flipped it because it feeds right into it. Tip one is the right fit matters. It really does matter. So based on that initial period, based on my initial questionnaire, because I kind of do things a little bit differently. So I don't go straight to engagement. I send out a 35, 40 question questionnaire to find out all the things that I need to know before I engage that client. And then I have a second step, which I'll come to in a minute. But we intentionally work with very targeted industries. We work with businesses that have payrolls with under 20 staff. We don't want the big end of the street. We want what we're good at. We want the industries like e-commerce and building and construction and the industry, so that I don't have to know 1,000 industries and be not good at any of them. So it's not about saying no, but it's about ensuring that it's the right alignment so we can add value where it matters most. And then tip two is we get clarity through a health check. Now, the health check has been amazing. I use a product to do a health check with the client's authorization, of course, with Ignition, to make sure that we can plug in all of their data, find out what is really going on in their file so that we can have a conversation to find out whether this is a good fit and where their pain points are that they don't necessarily know about. Through this health check, we don't do anything transactional. It's just you pay me to do this health check, and then depending on the client and the relationship, I might discount if they become a client, might take that off, part of that off, not all of it, part of it. And it becomes clear if the client is open, engaged, and aligned with how we work based on this health check conversation, because that's where we really get to the guts of who this client is and if we can work together. I just find it a really respectful way. So that's step two of our engagement process. We ask all the questions, we do the health check, we find out all of the places where they really need help, and then we decide whether it's the right fit. And that's the word I use, right fit, not, no, I'm not taking your business.
Yeah, I think that's great. And I love that you charge for that health check, because I've seen it over my whole career, people doing these free health checks as a way to win clients. If you're doing a real health check and you're really understanding what's going on in that business, there's a lot of work in that. And it sets the scene right at the beginning for a client that you're going to bring on, that your time is valuable. And they should appreciate that right at the beginning. So I absolutely love that, Michelle. I think you're the first person I've ever heard of who does that and prices it out.
There are a few of us, but the other thing is it's a measurable place. So if they're starting with a data quality score at 30 and we can take them up to a 90, it's a win. We've just kept them forever.
That's fantastic. Now, after you go through that process and you've gotten to know them, how do you apply your pricing floor minimum service fee for your clients?
So we do have our minimum. Each task we undertake, like we've had a matrix. I mean, we've been doing this for a lot of years. So we know how long it should take in a manual system to do an IAS or to do a BAS or to do a TPAR, depending on, the size of the client. We know how long it should take. And we do keep track of that time. We don't just guesstimate, we actually can keep track of everything. So we there's basic bookkeeping based on a sole trader. There's bookkeeping based on how many staff. Staff really is what gives us those good minimums. But then we offer optional services with floors, like TPAR has this price, and it doesn't change. There's additional if they go over the estimated hours by, substantially, apprenticeship claims, workers' comp annual returns, all of these things that in Ignition we offer as optional services that they may not know that we do. So that's our upsell. everybody does them. They do the long service leave, they do the workers' comp, apprenticeship claims, TPARs, they do all of those things because now they know we can do it. So whatever our minimum floor was, we've just bounced that up. I love it's given me the chance to say, did you know I do this? So yeah, it is. It's not, we don't have like a minimum per client because we're doing sole traders, micros, and then small clients. We don't have a minimum based on that. It's a minimum based on what we're doing for them. I mean, I'm never going to spend 7 minutes in a client file and charge them 7 minutes for payroll. Like that just doesn't happen in my world.
Yeah.
So
no, that's great, Michelle. Now, you mentioned Ignition a couple of times, and I know that you use some other tech, but what tools are you using and how are you using them to automate and streamline that repricing process and the engagements?
I love automation. I've loved it for a very long time. Since back in the day, I don't think I would have been in this business if I hadn't found receipt capture. When I found receipt capture, that just changed the whole world. And so if a client expects me to do things like data entry, they're not going to be a client because receipt capture is essential. In our automated health check, we use Expert to run everything through the system and uncover those problems, which is that flat fee prepaid service. Automation is the reason that we've moved away from purely hourly pricing, because if you're still working on an hourly basis, you're not going to have a business if you start implementing automation. But I want to be rewarded for implementing these tools that tell me that, your GST registration has lapsed or you haven't lodged your ASIC. I don't want to be penalized for those things. So that's why automation, yes, it reduces the admin, but it's based on the outcome, not that time that I do, even though I'm keeping track of that time to find out where I need more automation. Those time sucks that you don't realize are happening until you run my report. Like my report is in Jira Projects, and I can see at the end of every month where things are spinning out, so I know where I need to find some automation.
That's fantastic. So using that combination of the automation and your service pricing floors, you're really driving that profitability in your pricing for your clients.
Constantly checking my profitability every single month to make sure something hasn't blown out and we don't need to have a discussion.
That's great. I've worked closer and closer with bookkeepers over the last couple of years, and now we have like bookkeeping at Business Depot, like Collegiate heads that up, and you guys do it better than us. When you do it well, you do it better than the accountant. So kudos.
We don't want to know tax rules. We want to know our rules. So
I think it's great. Thank you so much for sharing all those insights, Michelle, and I hope you have an awesome day.
Too. Thanks, Beck. Great to see you.
You too. Okay, so introducing our next panelist now, Paul Sweeney. Good morning,
Hello.
Paul. How are you?
I'm good. I'm nice and warm and toasty, enjoying the sunny weather for a change.
Fantastic. It is a little bit sunnier today. There's still a chill in the air, but it is a little bit warmer, so that's nice. Now, everybody, Paul is a managing director of Pretium Solutions who brings over 25 years of experience in accounting and business advisory. Growing up in the country of New South Wales, he saw the vital role of family-run businesses, sparking his passion for supporting SMEs with high-quality, value-driven advice. A dynamic speaker and business podcast host, Paul shares practical insights from years of guiding businesses to success, helping audiences navigate today's complex business landscape. And Paul, I just love that because that's what accountants are here for. We are the backbone of the SME world.
Oh, absolutely. It was one of my earliest frustrations that accounting seemed to be only about the numbers and the tax return, and having seen the impact of small business failure, particularly in country towns and small communities. It was really about using what we understand to create a better outcome for business owners, and that has a huge impact into every community. So that's the driving force behind what we do.
That's great. Now, while going through that driving force, you offer a great service at what is not a cheap price, but a reasonable price to your customer, your clients. Is there a script or phrase, or just how do you deliver that price increase conversation with your clients?
Yeah, look, I don't think there's a specific script. We do have a process. One of the key things is being very clear about how we communicate. So making sure that we communicate clearly, but in multiple ways. So not just through a generic email blast, but specific conversations with clients, face-to-face meetings, but ingraining into that process that the prices are being reviewed annually. We do it as a regular process, but it's not just a price review, it's a service review, because one of the things we're reviewing is, can we continue to deliver that particular service profitably for us? Because if we can't deliver it profitably, it means we've got to increase the price significantly, or we either stop doing that service. And maybe we should be aligning with, say, Michele to do more of the bookkeeping, because we can't deliver that effectively and at a price that suits the client. So we're looking at, what's the way that we deliver our service? Is the reason we're not cost effective is because we really need to change the way we deliver and use more automation or change the way we communicate with clients so that we delivering that high value at a profit to us, but also where the client sees the value all the time. So that making sure it's an annual process and being very clear with how we communicate. The other thing I do try to avoid in this communication is avoiding blame by blaming, I've got to pay more for staff, or my suppliers have increased the price, or everything's just so expensive. I want to make that review about, actually, we're trying to provide a better service to you, and by providing a better service, we're providing better outcomes for you, and that putting it back on, we're here to create the best outcome we can for you.
That's great. And that's all about driving that value proposition as opposed to just, blaming the economy for increasing your prices. That's really great. Now, Paul, you, like me and also Michele, who just went through this as well, use a pricing matrix in your firm. So can you talk us through how that works in your business and how it helps ensure that consistency and profitability across your clients?
Yeah, absolutely. So no two clients are the same, even if they're in the same industry, running the same structure, using the same software. No two clients are the same. And we ran into a lot of trouble trying to box clients into a gold, silver, bronze style package, and it never worked. We had clients who didn't like one part, but they wanted something from another package, and we spent more time, disputing what we were actually going to deliver for them. So two goals there was to make it clear, make it what the client wanted, but also take away that pricing conversation from me. So enabling the team to actually be able to have those communications with clients, particularly where they wanted to change what we were delivering. So some of the things we did develop a pricing matrix, and some of the key inputs into that are the structure that the client's using, their current size, what stage of business they're at, what systems they're using, how many stakeholders are there, how needy are they, how much hand-holding, how much communication do they need, what services do they want to hold on to themselves, whereas the services that they just want us to do it for them. So there's a variety of inputs into that structure. And so the key thing, each year we review the pricing of those inputs, and that's behind the scenes. But when we're working with the client, before we dive into here's our checklist of services or our menu, we start with the conversation about what are they trying to achieve? What do they want to achieve for their business in the next 12 months? What's the growth they're trying to achieve? And from that conversation, we suggest to them, this is what we think you should proceed with. Okay, and so we work through that model, and Jason mentioned the upselling. Do you want fries with that? We've actually labelled our pricing service matrix as the hamburger model, sticking to food, because everybody can identify with that. Now, with the hamburger model, there are certain services that every business needs. Okay, and that's basically your meat and bun, whether it's beef, chicken, vegetarian, fake. Whatever kind of bun you want, naked, wrap, it doesn't matter. You just have a hamburger, and that's the essential services. So the compliance services, the statutory work, that's there. So that's the basic. But what do you want on your hamburger? What do you want? Do you want us to do the BASs? Do you want us to prepare management reports? Do you want us to do your workers' comp? What of those, I guess, transactional activities do you want us to perform and how frequently, and what are you prepared to pay? What level of engagement do you want? But we all know that the hamburger doesn't leave you satisfied, particularly when you want something more. And that's where we tell our clients to make it into a great meal. And that's where we're looking at things like forecasting, planning, exit planning, business planning, strategic reviews, strategic meetings, training staff. So we're looking at how do we make their business a great business, because we're trying to move the conversation away from I need these services done to satisfy compliance obligations or to satisfy a bank loan to how do you help me grow my business to the best business that I can have for the goals that I have.
I think that's fantastic. And now all I can think about is getting a hamburger with a lot. So that's awesome. Now, is this your hamburger model? Is this known to your clients that this is the way you price, or is it just internal?
No, it's certainly known to the client. We don't share all the mechanics underneath, but we have it very clear. We have the fact sheets. We actually have our fact sheet with our accounting services explained and outlining what's included in each stage, so that they have that up front before we have that conversation. And we do have, we share the inputs with them. So we have it on the screen. We share one page of that, which actually has the models that they've chosen, and then out comes the price, which will be a monthly service agreement. So we're quite transparent. We want to make it very clear to them. These are the services that we are going to provide for you based on our conversation, and here's your commitment to that. Now, we review that regularly. So there's actually 3 stages now. We've added a 3rd stage. The first is particularly for a new client. We review that after we go through the onboarding process with them, which was something we've had to change dramatically because that was an area where a lot of things start to fall apart if you don't manage that process correctly. And we've got so many more, compliance requirements that are now as part of that, and managing that process more effectively is a key. So as part of going through that onboarding process where we're reviewing their structures, their deeds, their tax registrations, we actually find a number of other opportunities to help the client and improve their situation, or things that have to be rectified. So we address them as an out of scope, or maybe we factor that in to change the agreement that we're going to provide on a regular basis. So we use that. That's the first opportunity we're now looking at, is going through that onboarding process with them and revisiting. This is what we said initially. Having gone through this process, we now think we need to make these changes and move forward. The second aim is that at a 3 to 6 month period, we'll review, is it actually working? Are we delivering the right services for what the client needs? Are they actually valuing it? Because if we're saying, hey, we're producing management reports to you and we're going to have a meeting with you every month to go through these, if the client is consistently not booking in for the meetings and not looking at the reports, what's the problem there? So we'll get in contact with them and find out, are they happy with the value we're delivering? Why are they not taking us up on these services that we've agreed that we're going to provide for them? And what's the issue? Let's deal with that issue. And if it's a case of, I just don't have the time, or it's too much for me, then we might scale that back. Because the last thing we want to do is over-deliver and overcharge, and the client resents that and then walks away. There's been a couple of situations where we've actually told the client, you don't need this, we're going to take it out and we're going to reduce your fee. And they've been so relieved that they've actually then referred us to quality clients as a result. So being open and upfront about how you price and the value you're creating for the client is really key. But communication at all stages, absolutely essential.
I think that's fantastic. And I have done that myself at times, knowing that if I don't actually action this, there is a risk that they will leave. And I've won other clients in that same circumstance where they've come to me and said, my accountant's charging me for all this stuff, I don't even want it. And they're really important conversations to have. Now, Paul, when you go through this pricing and resetting of prices and engagements with your clients, how do you assess whether or not that client's actually profitable to your firm?
Yeah, so that's great. And look, I think there's been a movement in the past or recent times for accountants to ditch timesheets. And I think we've done ourselves a big disservice there. And I don't mean timesheets for a pricing, a source for pricing. The timesheet is there in terms of how effective are we at delivering that service? Because if we're working out that the time it should take to deliver this service is 2 hours, but our team are consistently taking 4 hours, What's the problem? Is it a problem with the way we're delivering our system, or did we just get it wrong? Or is it specific to one client? Do we need to educate that one client on a better way of communicating their information with us and participating in that delivery? Or is it widespread? So we review how effective are we at delivering, and then, do we need to change the inputs there? That's one of the things. I guess the other thing is, how easy does the client work with us? Are they cooperative? Because if they're not cooperative, or they're resistant, or they're not happy with what's going on, we need to address that first. And if it's a case that they're consistently, they don't want to change, they don't want to, change the way they deliver to us to make us more effective in how we provide services to them, it's not going to work. And that's the time to say, look, we don't think we're the best accountant for you. We're not the right advisor for you. We think you're more suited to this kind of person. Here are 3 recommendations. We suggest you go and talk to them. Because at the end of the day, you don't want to have that conflict. And I've been in too many businesses where staff or team members, they start to build a resentment because of that one client that's always complaining about how things are done or not done. Clear communication with clients all the time. Understand the problems, understand the problem of why things are not working the way they should, and then address that.
Yeah, I think that's fantastic. And all of us are guilty of taking on clients to pay the bills in early days. But once your business is up and established, you can just add them to your hit list to disengage as soon as you engage a really great client, and for nothing else other than your staff's mental health. Now, Paul, like me, you've been doing this for a little bit now. Do you think the firms in Australia are still undercharging for our key compliance services? And how do we fix this?
Absolutely. We are terrible. As an industry, we are terrible at giving away so much for free. And I think we feel like we're compelled that we have to do that. And that's wrong. I think one of the other issues is the clients don't always understand exactly what we are doing for them. Because, what is involved in a tax return? Is it a smorgasbord where I've paid for a tax return and I get unlimited advice for the next 12 months? Or if there's a problem with the ATO, you're going to fix that for free. Being very clear about what we're delivering and what we're not delivering as part of that fee agreement. So when we send out our review agreements, and I'll pick on individual tax returns, we don't do a lot of them, but we're very clear now that here is what the tax return is and this is what we're agreeing to. If you have these additional items, there will be an additional charge. If you have an issue with capital gains or crypto particularly, there are additional charges. You do not get everything lumped in for one fee. What we do as well is we specifically exclude services. So we specifically say this does not include payment arrangements. This does not include tax audits. This does not include accountant's letter for finance. That's a separate engagement. But being very clear about what is and what isn't included. And it's so much easier because of the way we can structure our templates in Ignition, our terms of engagement in Ignition, and the services, not just what's included, but the terms and conditions for each particular style of service. So using that and setting that up has saved us a lot of time and a lot of those, disgruntled questions about, well, I thought I was getting this as part of what I'd agreed to. We can very clearly say and show, well, here's the engagement letter we sent you. Here's the list of services. This is what we'd agreed to. And this is what we specifically said was excluded. And that's why we're charging you additional for this extra task.
I think that's great. I love that you're specifically excluding payment plans and audit work. With the increase of that, that's going in my engagement letters. I've taken a note. Thank you so much for your time, Paul. I hope you have a wonderful day.
Thank you. It's been a pleasure.
Bye-bye. All right, bringing on our next panelist. And now we have Katie Bryan joining us. Hi, Katie. How are you?
Hi, Rebecca. I'm well. How are you?
I'm good. Excited to hear all about what you're doing this financial year. Now, Katie is the founder of Propeller Advisory, a chartered accountant, business advisor, and creator of the Finance Launchpad Accelerator. She's got deep expertise in financial strategy and education, and Katie helps service-based and allied health businesses simplify their numbers and grow with confidence. Passionate about ditching the jargon, she delivers practical tools to build profit and freedom. A part-time CEO and full-time mum, Katie's often found dancing in the kitchen with her toddler, wine in hand, bringing joy, planning, and a little chaos to everything that she does. What a great bio. Thank you for joining us.
Thanks, Rebecca. Looking forward to it.
Yeah, so let's talk about how you tailor your pricing conversations depending on the type of client you have, because you're working with a range of different clients, startups, established businesses. How do you talk to them about pricing?
Yeah, so I think so we run a package model similar to quite a few of the others here today. And so everyone kind of has a package that's suitable to what stage of their business it's at, but they're given the option. Like, it might be that they're a startup and so funds are therefore low. And so compliance only, that package might be what they think that they're looking for, but they don't actually know what they don't know, right? So it's about education and actually explaining the value that can be achieved from going to, say, the middle package or the top package, which would include CFO services and those sorts of things. And just understanding the difference, like understanding that the base package really is your bare minimum. It's just what the ATO needs you to do from a compliance perspective. But going for the middle package, they will give you that regular check-in on your accounts that will help you grow faster than you otherwise would have. It will help you pick up where your profits are falling down, where your pricing needs to be adjusted, where maybe a hire wasn't the right timing for you, whatever it might be. But being able to educate them and inform them that what they get in the packages can actually help them, and investing in those services, which might seem expensive for a startup right now, will actually be better for them in the long run. And so I think that's kind of how we frame our startup conversations. And then our established business conversations, it's really explaining to them, I guess, what these different packages do entail. So again, a similar thing, but from a strategic perspective, like how us as accountants can actually help them grow their business, how they can sleep better at nighttime because of us, how they can spend more time with their kids or go on a holiday for 3 months of the year or whatever it might be, just because they're going to invest a little bit more in their accountant and the value and services that we can provide them. So I think it's all really for both ends of the scale. It is about just explaining the value that we can deliver, because as Paul said, a lot of what goes on behind the scenes, what we do, our clients can't see it. And so it's really up to us to educate on that and what we actually can do for them and what we are doing behind the scenes.
It's such a different world to when I started in accounting, and we used to just slip the invoice in the mail tray after the clients come in. Like, this transparent pricing is really the only way in this world where we can make some money. Now, when you're doing particularly your re-engagement or repricing with your clients, what role does the timing of that mean in your business? Like, how does that play into when you change your prices?
Yeah, so I think we look at price changes quite regularly with our clients that are growing quite fast, and we just have open and honest conversations with them. I love that that Jason actually puts in 3 or 6 months re-engagements. I think that's awesome, and we might actually steal that idea. But at the moment, we're just trying to have like open and honest conversations with them and hoping that they're just happy with it. But explaining like, congratulations, this is awesome, you've grown. But our fee also goes up as a result because our scope has increased. I think for us, like, the start of the financial year is prime time to do re-engagements. Our clients, if they're switched on and they're doing budgets and cash flow forecasting and that sort of thing, it kind of flows into that. But it's also a really great opportunity for us to explain and to deliver that we can also help them with that sort of work as well. Same with business planning, budgeting. It's all like, this is the start of the new financial year. If you want to go into this financial year and get an even better outcome than the last financial year, then use us to help you get there. And so I think the start of financial year is super powerful. It really does assist just with those planning conversations. And with that, I guess, the trying to get them to go on to that next level than just the base package that they might already be on. I think, as well, as I mentioned, like, after a big win or growth is a really good time, and never mid-crisis. Like, mid-crisis is a terrible time. I know we were terrible at increasing our prices during COVID, even though we delivered so much more value. But yeah, So I think there is definitely times that are better than others for sure. And even now is really difficult. Like I'm really struggling with sending out price increases. At the moment I'm doing it, but I feel horrible about it because the economy is not great and people are struggling.
Yeah, it does become really important doing it at a time like this to be able to clearly articulate your value.
That's right.
Now,
exactly.
Speaking of the like price increases and profitable clients, what do you do if a client's not as profitable as you would like or not really that profitable at all, but they're a big high profile client in your firm? Maybe they are like either a great referrer or, you know, one of your big revenue generators. How do you handle that?
Yeah, we've actually had this this issue, or issue is an issue, but this situation just recently actually where we've got a client who isn't overly profitable to us. They've probably been on similar pricing for the last 3 or 4 years because we just love them, but they are a great referrer. But now this year kind of enough is enough and we do need to increase our prices. And so I've had to really kind of go through and look at what the sort of clients that they have referred to us. Their brand is great for us as well, and really understanding our why and being intentional about it. Like, are they genuinely a poster child that attracts other profitable clients, or are they just draining our resources and therefore we're not getting any payback? With them, we've sent to them with a video in Ignition. I love that you can send videos and kind of explain to them that, look, it is time that we increase our prices, even though we do appreciate everything that they do for us. And we've been able to factor in a little bit of a discount to say thank you for that. And so I'm definitely not a fan of discounts, but in situations like this where they are a great referrer and it is a great brand, I do think that you can make little allowances. We also make sure when we're working with these sorts of clients that we have a bit of an exit plan in place. So we're really clear on if they're draining morale or they're blocking capacity for other profitable work, that we're prepared to kind of pull the pin and politely let them go.
I think that's great. And that use of discounts is really, really valuable because it allows you to tell them what the real price is for that service.
That's right.
So that they know, and then give a requirement for that discount. So if they stop doing that, if they stop referring or they stop whatever it is that they're doing, then that discount goes away and you already know what the real price is. So I absolutely love that, and is also going to be something that I will steal.
Yeah.
Now,
and I also, sorry, just if we can just touch on the discounts again, because I do love it. We use it a lot for our startup clients. Going back to question 1, we tend to discount their first year and we say, look, to support you in your first year of trading, we're going to give you a bit of a discount, and we use the discount feature in Ignition. And it's really great because you can set it up, say for the first 6 months, they get a discount, and then for the next 6 months, the discount's gone. But you're showing that you're kind of you're in there with them to help them grow their business and to kick it off, which has been really cool.
I think that's great. Now, I know we're supposed to move on, but one more question about the discount. What happens if the startup doesn't move along at the process that you like, the speed that you expected? So 6 months discount's gone, but they still have no money. Do you extend out the discount?
No. And we're very clear on that from the beginning. Yeah.
Yeah, I love that. Now, in that instance or any other instance, if you're talking to existing clients and they don't agree to that change in pricing or change to scope, how do you handle them?
Yeah, so I think we kind of approach this in a few different ways. Like, I make sure that we start with really clear data. So we show them exactly how the scope has changed, where overages have occurred, how it's cost us and our business. We have one particular client that fights me every single year on price increases. And so I know now to get really clear with the data. And I also am offering options. Even I was talking about our packages before, and I'm trying to free up some of my time. And so I've been actually going to our clients with, okay, this is the cost that it is to work on the one-on-one advisory with me, but you could actually pay less if you work with one of my offsiders instead of me and get a cheaper fee. And so I think making sure that they have the options, you're giving them choices. So you're still going to get a great service, but it's just not me that's running the meeting. I think that can be really helpful as well. And again, I think anchoring it to your standards. Like, we have to charge this fee if you want a great service. It means that I can do the prep that's needed before our sessions. It means that I can review in detail your accounts because I am charging appropriately and I can deliver the value that needs to be there for our service to be of the standard that we want it to be. And I think as well, like communicating early, I've been trying for the first 6 months of this year to make sure that whenever I'm in a meeting with a client, I've been saying to them, just so you know, we do have to increase our fees. I'll be sending you out a new engagement letter at the end of this financial year, so that they know about it, they're expecting it, and it's not a complete shock when the new engagement letter arrives in their inbox.
Yeah, so again, and Paul talked about this as well, it comes down to clear communication, and nobody likes a horrible surprise. We don't like it. Our clients don't like it. Thank you so much for your time today, Katie. It was great to talk to you. And not a lot of people talk about discounts, so that was amazing. I hope you have
good.
Okay.
Thank you.
One quick thank you again to all of our panelists who joined us today.